Hello once again, and welcome to another edition of the SaskAgToday.com Roundtable. I'm joined by the Chief Agricultural Editor for SaskAg Today, Kevin Hirsch, as well as 620 CKRM Regina Agri-News Director, Ryan Young. I'm Doug Falconer, Agriculture Director at GX94 in Yorkton. And the first item that came up first this week, of course, was that the Canadian Canola Growers Association announced that the advance payments program is now open for another year. Ryan, you had a chance to speak with Dave Gallant on that.
Yeah, it's open for another season. They opened up as of this past Monday here. He was also telling me that they kind of technically did a soft launch the previous Friday, and I think he said that they were up to around 500 applications very early on. So it just kind of goes to show you the demand for the advanced payments program, and another kind of tool in the toolbox for producers to, fund their farming operation and getting some capital, whether that's for covering the cost of fertilizer or grains or fuel, etc., and for livestock producers covering the cost of raising animals and stuff. So key things to know include the first $100,000 of a cash advance is interest-free for about 50 eligible commodities, and for another year, they're allowing $400,000 interest-free for canola. If you're planning on seeding canola for this year, that was introduced last year in light of the Chinese tariffs. So they're expecting more demand for this year, if not right around the same level as last year, especially for the canola side of things, even though the tariffs in China have been reduced fairly recently. So we'll see where the numbers lie. But yeah, in the meantime, applications are open. You can call them, or if you're already a returning customer, you can use an online portal on the CCGA website.
Kevin, it sounds like the advance payment program has been pretty helpful to a lot of producers over the last years.
It'll be very popular, and I think participation has continued to increase. We're sort of always stuck in the past, though. In a lot of previous years, that $100,000 interest-free maximum has been bumped up higher. This year, it is higher as a vestige, but only on canola. So it's always a little bit out of sync with time. I would suspect might be more useful if it was bumped up to $200,000 or $300,000 across the board, rather than a special provision specifically for canola, because as we've seen, canola is not necessarily suffering right now as compared to the other commodities. But good news that advanced payments program is available, and of course it's not up to the Canadian Canola Growers Association or any of the other administrators of the program. They do just in fact administer the program, which is funded by the federal government.
Some other news this week, we heard from LDC, their head office in New York, that the LDCP protein isolate facility in Yorkton is now in the commissioning phase. Sounds like they're going to be, just trying it out for the next few months. It might be taking on a little bit more by mid-June as it comes to peas, and then sounds like full production by the end of the calendar year. Good news for pea producers, Kevin?
It's always good news to see more secondary processing. It'd be interesting to know just how much of the pea crop is going to fractionation purposes. I've never seen any estimates and calculations on that, but there's a number of processing plants that are now doing pea fractionation and pea protein isolates. It's difficult to get plants up and running. It looks like this one is coming on stream in a really good time to get everything running well before this year's harvest comes in. In many cases, we see large facilities of this nature be delayed for one reason or another and take longer to commission, and that's certainly the case with the canola crush plant that Cargill is putting together in Regina. It's taken longer and far more expensive than initially thought. So good to see that LDC looks like they're ramping up right at the right time.
We also heard this week that a Calgary-based company is purchasing the sulfate of potash facility in Wynyard. Apparently, they also own a facility in Chaplin. Ryan, you heard about that as well?
Yeah, I did hear a little bit about that. It's kind of interesting. And initial thoughts, it's good to see that a Canadian company is making an acquisition and keeping business within Canada. I'd be curious to know which US-based company and where exactly they're from, but nonetheless, it's generally good news as well. And I'll be reaching out to the head of, I believe it's Saskatchewan Mines and Minerals, if I'm not mistaken, just to get a few additional comments regarding the deal and how they plan on utilizing it moving forward.
Kevin, your reaction to that news?
I didn't know the relationship between the facility at Chaplin and the facility at near Wynyard, I guess it is. I think it was at one time called Big Quill, that one relied on the other. Of course, anybody that's traveled through Chaplin has seen the large amount of white sodium sulfate. I think that's the tailings that are sitting there, or maybe it's the actual product they're mining, but didn't really know there was a relationship between those two facilities. One was a customer of the other, and now it'll be under common ownership. So it looks like a positive development.
Also this week, Kevin, you had a chance to speak with Milt Poirier from the Ag Transport Coalition, and the latest numbers show that CPKC Rail has really been struggling this winter.
Railway performance so far up until the last month or 6 weeks has been pretty darn good compared to what the railways were able to accomplish most winters. But in the last, especially 4 weeks, for some strange reason, CPKC has really struggled, and numbers have continued to go down and down and down. The last numbers we had, only 52% of hopper car orders by shippers for grain movement had been fulfilled by CP, and meanwhile it doesn't seem to reflect with CN. CN's numbers have stayed relatively consistent. So as at the time of this taping, we're still waiting for the Ag Transport Coalition numbers for this week to see if CP is starting to recover, but they've got a long way to go. Hopefully they're making some progress in that regards, but when you're only fulfilling 52% of hopper car orders, obviously there's some serious problem somewhere.
Also on Thursday morning, Statistics Canada released their seeded acreage preliminary report for this spring. Ryan, you had a chance to speak with a man from Statistics Canada on that.
I did. Unfortunately, he didn't have too much to say because they try to stay objective when it comes to these things, so he didn't really have any additional comments regarding the report, other than that it was based off of their field crop survey that they conducted between mid-December and mid-January. Involved some 8,200 farmers from across Canada, just to ask what their seeding intentions are for the upcoming season. And to make a long story short, without looking at the numbers directly, Stats Canada is expecting Saskatchewan producers to seed more canola and barley, but less wheat, lentils, and dry peas. So not really a surprise on the pulses front. Looking at the national numbers, they said that the lower acreage is likely due to the fact that there was a lot of production from the previous years, so producers are kind of backing off a little bit on that, but a little bit more canola, not surprising. Mind you, the survey was done prior to the Chinese tariffs being lifted, but nonetheless, not really a surprise there. And that's basically kind of the summary of the StatsCan report for Saskatchewan.
Kevin, did you dive into those numbers at all?
I didn't look at them in great detail because a survey conducted middle of December to middle of January, I'm not sure that it's necessarily very reflective of where we're at right now. Certainly my seeding plans weren't finalized by then and have changed quite a bit. I think they got the directions correct on many things, but we've seen canola prices increase dramatically, even just in the last week with the war in the Middle East. So I think if anything, canola could be even stronger, but one mitigating factor to that is that while canola prices are substantially stronger, if you're changing your seeding plans and deciding now that you're going to grow more canola, you probably need more fertilizer, particularly more nitrogen fertilizer, and the price of that has skyrocketed with many other things out of the war of the Middle East. It was going up even before hostilities started in the Middle East, but urea right now is more than $1,000 a ton, probably $1,050 last I checked locally in my neck of the woods. But a lot of that was purchased earlier at anywhere from $7.85 to $8.50, that range. But in recent times, the price of fertilizer has gone up dramatically.
And it sounds like grain prices, not just canola prices, up as well, Kevin.
Looks like wheat prices are up substantially as well. I think we easily follow canola prices, and that's one we tend to be watching. But yes, certainly spring wheat prices have gone up dramatically as well. The interesting thing is, the question I have is, we all wonder how long hostilities will engage in the Middle East. And I think, the hope is that this doesn't last too long with all the bloodshed and loss of life there. If hostilities end in a week or two, does oil prices come back down? Do our gas prices at the pump and diesel prices for farm use come back down? Does canola come back down? Do wheat prices again moderate? So it's a rather uncertain time.
And of course, yesterday in Regina, that being Thursday, the Saskatchewan Ministry of Highways and the Saskatchewan Association of Rural Municipalities announced an agreement on some infrastructure funding. Ryan, you had a chance to sift through that news conference.
That's right. Yeah. So what they announced was $46 million in funding under the Rural Integrated Roads for Growth program. And that's a program that the provincial government contributes to, as well as rural municipalities towards various infrastructure projects, whether that be roads or culverts or bridges, etc. And the program covers up to 50% of the cost for RMs, whether that's $500,000 for a road or $1 million for a bridge or culvert. Just all depends on the project and the location. But the province is contributing about $16.9 million, and RMs are contributing around $29.1 million. So there's a full list of 41 approved projects for the funding that you can find on the Saskatchewan government website. You just have to sift through the news releases. It's the latest one from Thursday, March 5th, if you want to have a look. So yeah, it's another good thing. One other notable thing as well to note, President Bill Huber of SARM was kind of made the similar comment as crop insurance. He said, while they appreciate the contribution, they could always use more funding. So just given the inflation and some of the factors that we talked about, that's increasing costs. So that's kind of the reason for his comment made at the news conference.
And Kevin, obviously this is annual funding, and good to see.
Good to see. What we're kind of missing is context. 16.9 million from the province this year. I don't know what the number was last year. Is this up or down? Is it steady? And how closely does it match the need? Certainly, it seems like the need, as for many of things infrastructure related, never goes away. But I have no terms of reference to know whether this 16.9 is more or less than other years. So kind of hard to comment on it.
All right. Well, that's going to do it for this week's edition of the SaskAgToday.com Roundtable. On behalf of 620 CKRM Regina Agri-News Director Ryan Young and the Chief Agricultural Editor for SaskAgToday.com, Kevin Hirsch, I'm GX94 Yorkton Agriculture Director Doug Falconer, saying so long until next time.